Happy New Year, everyone. Some of us are hitting 2019 hitting the ground running, and some of us are face first. But we have Matt Cheslock here to help us get through January so far. Matt, Happy New Year. Thanks for coming on the show.
Absolutely. I'm not sure if I'm running or if I'm face first, but I guess we'll figure that out.
Whatever the case is, hey, look, it looks like stocks are doing okay again today, and I'm sure you're expecting this question. Will earnings season unhinge the comeback?
No. You know what? I don't think so. I think, earnings season, we're starting to see some companies that are releasing numbers beforehand, giving us some guidance. And those are the companies that are warning. We saw Apple last week. We saw Macy's today. And these companies are getting punished. But so this is going to become more of a stock picker's market than just an overall, let me buy a sector and think they're all going to perform. The underlying retail feel probably isn't as bad as maybe Macy's is going to present it. And hopefully it's a one-off and we don't have the whole retail sector suffering because of this. But after you see someone like Macy's, if you don't warn and you release earnings and they're not good, you are going to be punished even more severely.
And they sure are. And I was surprised to see that, considering that we're going to get okay retail sales next week. Forecasts are displaying a 0.3% tick up in that.
Yeah, Apple is another. Basically, let's talk about retail, right? I think they were expecting a really good holiday season, and maybe they didn't get what they thought. So these numbers are going to be awfully important to see. Are they going to meet expectations? Are they going to meet whisper numbers? And if they don't, what does that say about the overall signs of the economy? Hopefully, the Fed can read that and say we can now adjust on the fly. And now our dovish comments that we had yesterday maybe are more in line, and we don't have to raise rates, or we can be more data dependent, not be so much based on the future and forecasting. We can say what are we seeing in front of us, and now we can adjust rates accordingly.
We will hear Jerome Powell speak today. What do you think about the Fed minutes? Do you think that they were more dovish than he portrayed them?
I don't think so. I think he gave us a pretty good indication of what he was going to say. And that's why the market really didn't react yesterday at the release. It sold off a little bit, rallied back, and then the market kind of got weak at the end of the day after some of the comments Trump made about his meetings with Pelosi and Schumer. So I don't think it was the Fed. I don't think we got a surprise out of them, which was good. They were a bit dovish, and having a backstop like that for the market when we thought we could see 3 to 4 rate hikes this year was kind of a good sign, and that's why this market has seemed to got back into that buy that dip mode, at least in the early January.
Speak about a stock picker's market. So far, energy stocks are doing the best so far in January. Do you see oil having another volatile year?
Yeah, oil is in some kind of sweet spot here, just above 50. It's not greatest for the consumer, right? But it's such a large part of our economy and a large part of the indexes that, oil below 50 was not good. And that's what really transpired, November, December, when the market was the weakest. Now we're starting to see it rally, and the whole market's kind of rallying with it. If we can find that sweet spot, hopefully it's not 85 like Saudi Arabia once, but, somewhere between 50 and 60 seems to be the sweet spot, not only for the market, but for the consumer, for the price of gas. There could be volatility in between where technically we break out above 60 and trends will go to 65, 70, and then it maybe fail. Everyone thought 50 was going to hold. It held for a long time, broke to 45, traded there for a while. So, I'll stick with 50 to 60. I'll be okay with that.
I'll stick with that too. Oil had one of its worst performances in a decade last quarter, and it seems like it's moving. The energy stocks are at least moving in lockstep with spot, which is not usually the case.
No, January is a good time for companies to reevaluate how they're going to use their money going forward. It's a new year, so you can get some rosy forecasts if we can get oil to rise a little bit, if they can justify oil at a certain price for their investment cycle. It obviously helps to have an uptick in oil. You have a backstop with Saudi Arabia taking more offline. Those are all positives for the market, maybe for spot, for oil companies. And as I said, as long as it doesn't break out above 60, 65 in any meaningful way, the consumer should be okay, more money in their pocket.